Now the growing U.S. home foreclosure problem. Banks foreclosed on more homes this summer than in any 3-month stretch since the housing market soured in 2006. An industry group, Realty Track, reported today more than 288,000 properties were lost to foreclosure in the July-September quarter. That's up from nearly 270,000 in the second quarter. But fewer takeovers are expected now that several lenders have suspended foreclosures. They're working to sort out problems with questionable documents, bad documents. Meanwhile, attorneys general in every state and the District of Columbia launched a joint investigation yesterday. And NewsHour economics correspondent Paul Solomon has the backstory on the flawed paperwork being used to challenge foreclosures in court. It's the first in a periodic series on the mortgage crisis, and it's all part of his regular reporting, Making Sense of Financial News.
Patricia Antrobus lives in a turn-of-the-20th century house in the Bed-Stuy section of Brooklyn.
This house my father bought on the GI Bill when I was 1 year old. I love this house. You know, it's my sanctuary, it's my what is it, Scarlet? It's my Tara. It's everything to me.
It's also her money pit. In 2004, Antrobus, a school secretary, got a mortgage so she could buy out her siblings. Repair bills soon forced a refinance.
When the roof goes and you have a $6,000 water main break at the same time, you know, I did do a couple of refinances just to try and keep this place together.
She wound up owing nearly $500,000. Her payments dependent on the tenants upstairs paying rent, her son downstairs helping out. Then came the Great Recession, laying them all off, save Antrobus.
And that just skews the whole thing because I don't have a lot of room and wiggle room, you know, to pay everybody.
3 years later, Antrobus fell behind. The bank moved to foreclose. But at the 11th hour, in what might be Exhibit A of the foreclosure freeze now threatening the nation, her house was saved by a New York State Supreme Court judge who noticed something fishy in the foreclosure papers.
In 1661 Worthington Road, West Palm Beach, Florida, Suite 100.
That's the same address given by 3 financial institutions listed in Antrobus's documents. The same address Judge Arthur Schack had also seen for 2 other major financial institutions in other cases. It didn't add up.
How do 5 different banks end up, or entities end up in the same office? Why does somebody 1 week is the vice president of Bank X and next week is the vice president of Bank Y, and then they go back to Bank X 2 weeks later? It's just very questionable.
When he looked further, Schack found enough flaws to begin throwing foreclosures like Antrobus's out of court. 3 years later, the flaws he found have become embodied in robo-signers. Employees of GMAC, JP Morgan Chase, and Bank of America, a NewsHour underwriter, each of whom has admitted, under oath, to signing foreclosure papers at the rate of at least several thousand a month, like robots. Their banks have now halted foreclosures, in some cases nationwide. And Judge Schack claims he's seen more robo-signers at other banks that could make matters worse. But at Bank of America, which services 14 million mortgages, Rebecca Marone says they're responding.
We want to make sure that all of our processes, whether it's affidavit signing or whether it's notary or whether it's other foreclosure processes, are met 100% of the time on requirements. But based on our assessment, we do believe that the underlying facts of the foreclosure and the decisions are accurate. We are working to ensure that our processes and procedures are following guidelines and requirements at this time.
So you might have used so-called robo-signers, but that doesn't invalidate the foreclosure itself?
Yeah, the underlying facts of the foreclosure and the data is accurate.
But legally accurate, asks Judge Schack? All of them?
My concern is if you're going to take away somebody's house, let's follow the law when we do this. So let's have it done correctly.
But so much of this is legal boilerplate anyway. I mean, I agree to all kinds of stuff online that I never read.
Well, but by signing your name, it says you read it and you agree to it. But the point is, with these documents, when it's an affidavit of merit, it means that the person has said that, as swearing that they're familiar with the facts of the case. And if they're not, it becomes very, very questionable as to whether it's legally correct.
Because if they didn't do that, any numbers could be in.
Of course. And you get, why don't we have Mickey Mouse sign the thing instead of having a human being sign it? I mean, it becomes meaningless. I mean, that's the whole concept behind this getting a judgment, is that everything is truthful. If we don't know if it's truthful, why are we even signing this stuff?
The problems Judge Shack spotted years ago have spawned their own industry.
So we want to show you what the real deal is.
From his sleepy home base in Shelby, North Carolina, Max Gardner runs barrister boot camps. Lawyers from all over the country flock to the Sherlock of Shelby to deduce the facts of foreclosure, no longer elementary in this era of complex securitized mortgages.
You've got the originator, you've got the sponsor, the depositor, the trustee.
In the process of securitization, mortgages were gathered into a pool, which was then used as collateral for the now infamous investments mortgage-backed securities. But it turns out that in these several steps of the process, a key one may often have been neglected: legally transferring or assigning the mortgages from the original lender on through to the tax-exempt trust that issued the securities.
There was this great demand to generate more mortgages. And I think that with that demand came a lack of due diligence and proper underwriting and proper compliance with all the rules they had set up.
California lawyer Walter Hackett spent 27 years in the banking industry.
You know, when they tried to industrialize the loan securitization market, which is really what they did, they tried to automate everything they could. They started digitizing loan documents and shredding originals.
Making it harder, says Hackett, to track the transfers.
And of course, what that means is we have no clue who owns what.
What's emerging today, say these consumer lawyers, is a banking industry trying to cover its tracks.
And what we're doing is using the documents that the securitized trust created, the business model they created themselves, and we're saying, did you do things the way that you said you did it?
If not, the ownership of the mortgage is in question, and banks may be forced to negotiate. Consider the case of Sandra Orozco, facing foreclosure from a new bank after Judge Shack stopped an old foreclosure 3 years ago.
So who owns your loan now?
Bank of America, supposedly.
But you're not sure.
Well, the whole thing is real unsure right now since the information I got a couple of days ago. So I'm like...
Orozco's case is typical. She doesn't know who owns the loan. Bank of America, it turns out, only services it. And indeed, for the vast majority of foreclosures triggered by boom-era mortgages, legal ownership is now in limbo.
Well, just from what I've seen in California, I would say somewhere around, for sure, 65% conservatively, and the number might be much higher.
April Charney, a Jacksonville, Florida legal aid attorney, is a pioneer in the field of fighting foreclosure.
We have case review once a week from our intake, and we have walk-in intake basically into our program, thousands, and not one of them has shown the paperwork. In fact, I call out to my classes, the lawyers that I train, if you can show me a proper transfer from an originating lender to the first bankruptcy remote vehicle, I will eat the paper. And I haven't eaten any paper yet.
North Carolina's Max Gardner says that of the thousands of cases he's been involved with,
all I can say is I've never seen a complete unbroken chain.
But the point isn't to freeze all foreclosures permanently, says Gardner. It's to finally force banks to offer loan modifications that their clients can afford.
A lot of those cases, when we really pressed the other side hard for those documents, they came back with a very favorable settlement offer in the case that would substantially reduce the principal debt, reduce the interest maybe from 12 or 14% to 2 or 3%, you know, pay my legal fees so the consumer wouldn't have to pay that, and give the consumer an affordable loan.
You cannot have millions of Americans getting free homes. I mean, we're done as a country if that happens. But I think lenders or whoever will come to the table in droves when we start getting some of these cases decided in our favor. And ultimately we will.
That's what Patricia Antrobus is hoping for. After Judge Schack ruled in her favor in 2008, her mortgage was modified modestly, but the terms still proved too tough. She's now 4 months behind on her payments. Another mortgage reduction, her only shot at saving the family home.
The whole time that I've dealt with this whole situation, I've always felt like that small, you know, like David and Goliath, but I don't have a rock and a slingshot.
With the admission of document shenanigans, millions of homeowners might finally have the ammunition they've so long lacked.